Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. And we have a special guest today. Since Robert's not here, we brought in the next closest namesake in Rob.
Yeah, veteran Rob. I think you're an ICA veteran of 30 years now. So welcome back. You've been on the show before, so it's good to have you here for a very special conversation on platinum coming up.
Good to be here.
However, before we get into that, let's start with the ever-present gold precious metals market. So we talked last week, not a lot of change, just a continuation of the compression. So we're looking at that compression around the 618. We're actually back above it. So if we continue up, this is actually a pretty good bullish sign for gold. You know, I've been calling for a little bit of a pullback here for a couple weeks. We haven't seen it so far, just a consolidation. So I'm not quite there yet, but I may be leaning more bullish run over the next couple weeks.
Aren't you going to have a psychological resistance at 1300 anyway?
Well, you always do. A lot of zeros always get people's attention, whether they're legitimate or not. So, yeah, it doesn't surprise me to see it hovering down around just under 1300. We'll see who's the first guy to try to take it above. In similar fashion, but slightly different, silver also consolidating. However, its consolidation is down. You know, we've got a declining bottom and a declining top. We are sitting just below its 50% line. So we talked about this last week. Gold's at the 618, silver's at the 50. Silver continues to lag behind. So when the catch up happens, it should be pretty abrupt. But we are sitting above that declining trend line from the previous trading range going back to the middle of 2018. So anywhere in between these two numbers, 1550 and 1600, the longer we stay here, the more likely we see that continuation up. With
silver being somewhat stuck and gold's little rally here, that ratio's climbed back up to 82.5, but not a huge move.
Palladium is now above 1300. So again, putting in those all-time highs over and over again. Question is, where does palladium stop? And I've got a theory on this, Tori. I think 1450, and I can show you why. If you extend this price out from where we started back in about August of last year in the 800s, and we run up to around 1450, that puts our first fib level, the 382, right at the top of this previous range around 1200, where we had the breakout of the compression from December. So you can see on the chart here, we had this breakout out of this compression. We're now jumping up very aggressively. So all in all, that's going to be my first target high that I've given on the palladium price in this uncharted territory of about 1450.
All right, well, we'll be watching, and you know what it's also lending the opportunity to do is swap out of. So even if you're calling a little bit of a rally, we tend to focus more on the long-term big picture from the ratio standpoint, and I know we've somewhat beaten that up. But Rob, I mean, you know, palladium, what do you do with it right now?
Well, I mean, you can choose the safe option and take your profits in palladium, pay the taxes, and move to gold. But in my opinion, you'd be better off to pay the taxes and move to platinum. Because right now, platinum is at a, well, palladium is at a 68% premium above platinum. It's never been there before. Platinum and palladium are sister metals. And if you go back to, say, around July 2004, platinum was at 812. By May of 2008, 4 years later, it topped out over 2000. Very volatile. By November of 2008, 6 months after its peak, it bottomed again at around 812. Now 3 years later, it peaked again. This time it was at 1855. And since then, platinum has been grinding its way lower and rests today at the 810 level.
Right about the same place.
Right about the same place. And Miles has really good chart work talking about, Miles, why don't you interject here? Talk about the move from platinum out of its trading range from the 90s and the early 2000s and what that means today at the $750, $800 level today.
Yeah, Rob, it was kind of fun going back and looking at pricing all the way back to the mid-80s today, as we're sort of trying to piece together what is this platinum mystery and why do we care? Why have we been talking about platinum so long? Beyond just the ratios, but also its relative value to the dollar. So we went back and we looked, and it seemed like through the 1980s and 90s, we had sort of this trading range on platinum between about let's say 350 and 600. Highs and lows back and forth in between those two numbers. But realistically, we had a pretty set floor for a number of years in the platinum price, which is not surprising since it is an industrial metal. Now, lo and behold, the end of the 90s into the early 2000s, we had a pretty aggressive spike up from one extreme to the next. We went from that 350 floor up to about 650 on the high mark in 2 years' time, December 98 until December 2000. The correction was just as abrupt and pretty substantial. In fact, we exceeded that 618 fib level, and we went all the way down to the next, the 786, almost perfectly. So I went and looked at that on a grander scale, looking at the fractal of things. Does the smaller part seem identical to the larger part? So we looked at that bottom again of around 350, and we took it all the way up to the high point in platinum, the 2200 or so. Well, lo and behold, you can see multiple points in here. In about 2004, then the 2008 Rob mentioned, and then here again recently where we've come back and retested that grander scale 786 fib level. So my argument is this. For about 20 years, we had a floor in platinum around 350. I think that floor is now somewhere between 750 and 800.
Now, when you look at the ratio between platinum and palladium, it is not unusual for palladium to be 50% cheaper than platinum. And like I said before, it is now 68% higher than platinum. It's never been there before. And these are industrial metals used primarily in catalytic converters, and it takes almost twice as much palladium to do what platinum does. So in catalytic converters, $800 worth of platinum will do what $2,500 worth of palladium does. Why is platinum so cheap? The main reason would be recent reports that the European Union is pushing for all-electric cars, which don't use catalytic converters, and placing heavy taxes on gasoline and diesel to combat global warming and reduce air pollution. But the riots in France are pushing back at the global elites. China is also moving away from diesel engines, and they typically use platinum. This is a demand-side argument, but neither of these reasons justify, in my mind anyway, the price disparity between $800 platinum and $1,300 palladium. Now let's look at the supply side. 80% of known world reserves and 72% of annual global supply come from South Africa. And South Africa is not doing well either economically or politically, and rapidly following the direction of Zimbabwe and Venezuela. Unrest in South Africa can cause the global supply of platinum to be in jeopardy. And this is why I recommend a 10% allocation into platinum. Why wouldn't I do more? Maybe up to 20%, but no more. Because it is very, very volatile, like we've seen over the last 15, 30 years.
Well, and you're talking about new monies in a precious metals portfolio. If you're looking to add to precious metals ounces,
right,
you're saying 10%. But that can also come from an existing palladium position that you've been waiting to convert. And a counter argument to what you're mentioning, yes, it takes twice as much palladium. What happens when the palladium price is twice as high as gold, right? I mean, the higher that it gets and the further it separates from platinum, the more that pendulum's going to swing, and
right,
platinum suddenly becomes the first metal of choice again, more efficient, and it's half the cost.
Right. But even still, if you go back to that time frame from between, say, 2003 through 2007, the price of platinum was twice the price of gold on average.
Oh, I remember it well, yeah.
Yeah, during that period. So I actually have some of my clients, especially in IRAs, taking a small portion of their gold and converting it to platinum because, I mean, they can buy easily 50%, in some cases 150% more ounces of platinum now than they could have back during that time frame. And the conversion back to gold inside a tax-qualified account like an IRA, you don't have tax consequences, and then you can move back to gold and gain, even if platinum just comes back to the price of gold, just coming back to the price of gold. My clients can expect easily 40 to 50% more ounces of gold at that point than they have, currently that they're using to buy the platinum with. So there's some things that people can do in ratio trading, and platinum. Everybody talks about the silver to gold ratio, and most people are completely missing the gold to platinum opportunity.
Well, and it's the first time that we've seen too that you can go from silver to platinum, gold to platinum, or palladium to platinum. All three at the same time. It just platinum makes sense. So with that being said, Miles, let's move on to the other markets. What do you want to point out in regards to equities?
Tori, we can hit the Dow, the S&P, and the NASDAQ all pretty quickly because they've all kind of done the same thing. Specifically looking at the Dow, we've come back up about 11.5% since the Christmas bottom, just like the NASDAQ and S&P, but still down about 10% from those October highs. So for the Dow, I'd argue the first real test we're going to face is around 24,340, where we're going to come into some price action there. We had a little bit of a bull versus bear fight, also at a fib level. So 24,340 is kind of my climbing ceiling at this point, at least on this move, where we come into resistance. Now you compare those three markets like I like to do, going back to the old Richard Russell Dow theory concepts. What are the transports doing compared to the industrials? So while the industrials are pushing just underneath their 50% correction line and at an 11.5% return, the transports are sitting just above their 382. So kind of like silver lagging behind gold, doing the same thing but lagging behind. The transports are actually lagging behind the Dow on the upside. Now here's why that matters. To me, transports should lead industrials. If you're not shipping the manufactured goods, you're not selling the manufactured goods. So that's the old Dow theory argument about how transports relate to industrials. So if the transports are failing to resume any semblance of a bull market, or at least doing so slower than the industrials, I think the argument can be made that we are still looking more towards a swing into that bear market territory that we just scraped the bottom of last month.
Well, something that will add to your argument is the earnings that are coming out. So we're actually seeing a little bit of an uptick in the equities markets across the board, despite negative earnings news. And so I would think too that the transports would lag when you've got far more focus and intervention in the industrials, S&P, and NASDAQ.
Sure, and those transports, while the Dow is now only down about 10% from the top, the transports are still down 17%.
Yeah, and that's making sense too, because China admittedly has an economic slowdown that they're suffering through. Well, same with the European Union. Mario Draghi, the head of the European Central Bank, came out yesterday and warned lawmakers that the EU economy is weaker than expected, right? Well, that just means it's worse than we realized. And they just got done phasing out the initial steps anyway of phasing out their key stimulus tool, which was this €2.5 trillion bond buying program. So a month ago, that was the direction, but now there's no raising of interest rates there. They're sitting at negative 4% still, and that kind of segues into a dollar discussion.
Sure, but you talk about the tumultuous nature of the euro right now. I mean, for Pete's sake, Brexit is going on, and the pound is up against the euro this week. Go figure.
Go figure. Well, Draghi probably has all the answers. He just had his approved membership in his secretive banking group of 30. So this is going to be something that continues. But he's going to be leaving that post at the end of this year, actually Halloween of 2019. And then, I really have been waiting for that interest rate hike to begin soon and put some downward pressure on the dollar. So these comments that he just made today really kind of makes it look as if we've got a delay to that now. We might see some continued dollar strength if the relative weakness in the euro continues.
Yeah, Tori, and what a surprise if the relative weakness in the euro brings that dollar up in line with some of these long-term charts that we've looked at in the dollar. And as you can see, looking at the dollar quickly, especially in relation to some of the other currencies, but the dollar index, Robert last week had us draw that declining trend line from the previous high. We saw that we came back into it, breached above it. We've come down and retested it and bounced it this week. So I'm going back and holding to my firm belief that we're going to see 100 on the dollar.
Could be, and again, listeners, please understand that dollar strength certainly can weigh on the nominal value of an ounce of gold. But do you even realize that gold hit an all-time high in 72 currencies here? If it's not at an all-time high, it's within 1% or 2% of an all-time high. So you may feel as if gold hasn't been doing anything. Well, yeah, we've had a relatively strong U.S. dollar for a period of time here relative to other currencies. But if you look at those other currencies, especially minor currencies, for that to be an all-time high in 72 of those, that tells you that gold is doing exactly what it does as a barometer for currency weakness.
Before we wrap up, I just wanted to circle back quickly to one thing we discussed in midst of our platinum conversation with Rob here earlier, and that's the value of adding precious metals to your retirement account, especially within a precious metals IRA, where you can take advantage of some of our ratio trading strategies within your portfolio with the tax advantage of an IRA. So if you've considered adding precious metals to an IRA or been looking for an outlet to put your precious metals into other than keeping in your gun safe in the basement, an IRA is a great way to do it. We have tons of our clients that have taken advantage of the opportunity that the government offers through these tax-advantaged accounts. So if you have any questions about a metals IRA or some of these ratios like platinum gold, platinum palladium, silver and gold, please give us a call anytime at your convenience. We're happy to discuss your portfolio with you.
Yeah, that number to call is 800-525-9556. So thank you once again for joining us this week. Make sure to follow us on Twitter at ICA Gold and subscribe to this podcast by clicking the subscribe button below this video. To learn more about us too, you can go to our website, McAlvany.com.
Well, Rob, we appreciate your insight. Thanks for joining us this week. And certainly our listeners will love to have you on again down the road.
I look forward to it. Thanks, guys.
Thanks for listening. Have a great week.